It's time now for Real Estate Update. With Usha Chandra of GlobeNet Realty, real estate is our world.
Now we're standing here face to face.
Yes, let's have a quick look.
Well, ladies and gentlemen, once again, welcome to this very exciting segment of the weekly real estate update with Usha Chandra of GlobeNet Realty. With that, welcome to the show, Usha.
Thank you so much for having me on the show, Australian Indian Radio and Usha Chandra. It's great to be back again this week.
And it is always a pleasure to have you on the show. Well, right now, let's get on with the show and let's take a very quick look at the combined capitals and what the clearance rate has been since the last reporting period.
Although values are still falling quite rapidly, the rate of decline eased from a 1.6% fall in August. The loss of momentum in the pace of value declines was evident across most of the capital cities and broad rest of state regions, with a few exceptions, including Adelaide and Perth, where housing values have only recently started to edge lower. Although the downwards trend in housing values has decelerated, it's probably too early to suggest the housing market has moved through the worst of the downturn. Possibly, we've seen the initial shock of a rapid rise in interest rates pass through the market, and most borrowers and prospective home buyers have priced in further rate hikes. However, if interest rates continue to rise as rapidly as they have since May, we could see the rate of decline in housing values once again accelerate. The reduction in the rate of decline occurred just as other indicators recorded improvements. Auction clearance rates trended upwards, albeit subtly, through September, and consumer sentiment nudged a little higher as well on the back of strong labour market conditions. Unusually for this time of the year, we've also seen the flow of fresh listings continue to decrease during the first month of spring, helping to keep a lid on overall advertised supply levels. After rising 25.5% over the recent growth cycle, housing values across the combined capitals index are now 5.5% below their recent peak, or in dollar terms down approximately $46,100. The combined regionals index, which recorded stronger growth conditions through the upswing, rising by almost 42%, peaked in June with values down 3.6% through to the end of September. This equates to a dollar value fall of approximately $21,700 for the combined regional dwelling values. Most cities continue to see a substantial buffer between the current housing values and where they were at the onset of COVID in March of 2020. At the combined capital city level, housing values would need to fall a further 13.5% before wiping out the gains of the recent growth cycle, while Melbourne, which saw a softer upswing compared to the other regions, with values rising 17.3% from the trough to peak, would only need to see a 4.3% fall in values before returning to pre-COVID levels. At a time when the flow of new listings is typically ramping up, Australia's spring selling season is off to a slow start. The number of new listings added to the capital city housing markets through September was 12% lower than the same period a year ago and 10% below the previous 5-year average. It seems prospective vendors are prepared to wait out the housing downturn rather than try to sell under more challenging market conditions. We haven't seen any evidence of distressed sales or panic selling through the downturn to date. In fact, it's been the opposite, with the trend in newly listed properties continuing to diminish at a time when freshly advertised stock levels would normally be moving through a seasonal ramp-up. The reduced flow of new listings to the market could be a key factor helping to keep a floor under larger price falls, supporting the subtle reduction in the rate of decline through September. While the flow of freshly advertised housing stock has slowed, so too has buying activity. Capital city sales activity through the September quarter was estimated to be 12.2% lower than a year ago, but still about 6.5% above the previous 5-year average for this time of the year. Fewer buyers can be put down to a combination of factors, including a substantial reduction in borrowing capacity as interest rates have risen, low consumer sentiment, and a fear of paying too much as prices fall. CoreLogic's National Rental Index increased by 0.6% in September. That's the lowest monthly rise in rent since December 2021. At the national level, rental growth moved through a peak back in May of 2022 with a 1% rise. Since that time, the monthly pace of rental growth has been easing. This trend in rents is evident across most of the regions, but has been clearest across regional Australia, where monthly rental increases have reduced from a peak of 1.4% in January of 2021 to just 0.3% in September of 2022. A gradual slowdown in rental growth in the face of such low vacancy rates could be an early sign that renters are reaching an affordability ceiling. Since the onset of COVID, capital city rents have risen by 16.5% and regional rents are up 25.1%. It's likely renters will be progressively seeking rental options across the medium to high density sector where rents are cheaper, or maximising the number of people in the tenancy in an effort to spread higher rental costs across a larger household. After recording one of the most significant upswings across the capitals, Brisbane housing values have moved into a decline phase, with values falling 4.3% since peaking in May. Despite the sharp adjustment from growth to decline, the monthly rate of change actually eased a little bit last month, from 1.8% in August to 1.7% in September. Brisbane's unit sector is holding up much better, with housing values only 0.3% below their recent peak, while house values are down 5.2%. Home sales are also trending lower, with estimates for the September quarter indicating a 19% drop in sales relative to the same period a year ago. Rents are still rising rapidly, but the rate of rental growth has also eased over recent months, from a monthly change of 1.5% in July to 1% in September. Despite a slowdown in rental growth, rental yields continue to rise due to lower housing values against higher rental rates. The most important factor influencing housing markets will continue to be the trajectory of interest rates. The level at which interest rates will stabilise remains highly uncertain. The cash rate has surged 225 basis points between May and September. Interest rates haven't risen at this fast a pace since 1994, when households were arguably less sensitive to a sharp rise in the cost of debt due to lower overall debt levels. Financial markets are now pricing in a peak in the cash rate around 4.1% between June and August of next year, while private sector economists are generally less bearish, with Bloomberg recently reporting a median forecast of 3.35% as the peak cash rate in the first quarter of next year. The good news is that inflation may be moving through a peak. With the recent release of a monthly CPI indicator, it looks like headline inflationary pressures may have eased a little through the September quarter, with the ABS reporting a reduction in the annual inflation rate from 7% over the year ending July to 6.8% over the year ending August. If inflation is slowing, we could see the RBA start to ease back on the aggressive rate hiking cycle that commenced in May. Once interest rates stabilise, housing prices are likely to find a floor. Considering most economists are forecasting rates to peak through the first quarter of next year, the coming months are likely to feature further declines in home values. Strong labour market conditions should help to contain any material rise in mortgage distress. With the national unemployment rate at 3.5% in August and wages growth picking up, we aren't expecting to see a material rise in distressed listings or forced sales. We will be watching for any signs of market distress as the dual impact of higher interest rates and high inflation impact on household budgets. To date, the flow of new for-sale listings has actually trended lower as vendors retreat to the sidelines. That's a good indicator that homeowners are weathering the downturn. As interest rates...
And homeowners are weathering that right time. So right now, let's take a look at what's happening with the budget. And with the budget, what does it mean for the housing sector? Unfortunately, it seems like we've lost our audio on that one. Well, right now, let's move on and take a look at what's happening in your area. Some of this astonishing high sales. So what have been the big sales in Queensland?
Yes, looking at Queensland, Mermaid Beach at 5.7... unit number 579 Albatross Avenue, Mermaid Beach. A unit has sold, or apartment has sold for $5,150,000, 4 bedrooms, 3 bathrooms and 2 cars. And the other property that has sold in 30 Cypress Court in Myanmar, and that's $4,510,000, 4 bedrooms, 3 bathrooms and 2 cars. So really high prices, very, very expensive properties. The apartment, look at that apartment, $5,150,000.
And that is amazing kind of values which we have been looking. But I think this week has been a little bit lower than what we have previously seen as well.
Yeah.
So some very great figures that have been coming through. Well, right now let's take a look at your area and get a report on what's happening in your area.
Yes, looking at our area, north side of Brisbane in Boondall, Tyrone, that's is our trade area. Listings are a bit down, as we were discussing before. The listings are down. There's only a couple of new listings have come on the market. Sales is down as well, as we are talking about the interest rate and everything else. So now it's stabilizing a bit. So hopefully there will be more sales happening. We have sold a block of land for 555,600 square meter block. So that's one is sold. And then we sold another property at 51 Floramy Street. That one is gone unconditional, settling in about 1.5 weeks time. We have got open houses at 42 Fifth Avenue, and that one is going at 12 o'clock. So we have got a couple of open houses, no auctions at the moment. Rental market is very good at the moment. We've got three new rental properties this week, and we are doing open houses on those ones at 272 Muller Road, 112 Muller Road, and there's another one, a brand new listing at 16 Concordia Close, and that's in College Green Estate. So they are open this Saturday, and hopefully they will be rented soon after the open houses. So that's a short report because I have been on holidays. So that's hopefully next week we'll be talking about more properties. And if somebody wants appraisal, please call us on 3865 4466 for rentals. Contact Vicky, or for sales, contact me or Deborah on the same number, 3865 4466. Thank you so much for having me on the show, Australian Indian Radio. Have a great day.
And it's always a pleasure to have you on the show. So there you go, ladies and gentlemen. This week's weekly real estate update with Usha Chandra of GlobeNet Realty. Until next week, it's goodbye from us.
GlobeNet Realty. GlobeNet Realty has been the longest established, trusted and respected agency in its trade area. Usha Chandra, Director of GlobeNet Realty, provides honest and ethical service to her customers. If you are thinking of investing in Brisbane real estate market, or if you are seeking professional property management, then you should contact Usha Chandra today on landline 3865 4466 or mobile 0419 775 416. And for further updates, log on to our website www.globenetralty.com.au. GlobeNet Realty is your own local real estate agency. Situated at Shop 52281 Sandgate Road, Boondall. GlobeNet Realty. Real estate is our world.